Hey guys, thanks for stopping by here at thetradinganalyst.com. It's good to see you back here. We're going to get into a bunch of charts. I'm going to go over exactly why these are super important, not just on their own individually, but these are the big movers and shakers of the market, and they typically decide, especially if they're moving in unison, where the direction of the market heads. So not only as individual stocks are they important, is this video going to be important, but also as a barometer for the temperature of what the current market trend is, okay? At the end of the video, remember, or not remember, but I want to invite you to a free 14-day trial that we have going on right now. This is a special limited time offer. If you've been watching these videos, you know that we never offer free trials, so now is your chance to get in, to see what it's all about, okay? If you've been interested in signing up, now is the time to do it because you can do it for free for 14 days. So go ahead and check it out. All right, so I'm going to start off with Apple and move my way into some of the other stocks. So we're going to be talking about earnings. We're going to be talking about charts and how they both line up to create a high probability direction of where the market's going to head. So Apple. Okay, Apple. The last update we did on Apple was actually this day right here after the earnings had been released, and we saw that Apple was going to head lower the next day, and we said that Apple was most likely going to come down, fill this gap. Okay, we're about a few, just a buck away from that action. Okay, I'm not going to go over everything, but the move here was a false move. We had a false, here's a breakdown, here's that support. Clearly you can see that support. We broke that support, broke up right here just before earnings, making this a false breakdown, all right? And then we had a double false move with a break outside of that range, okay? Earnings are big movers here, okay? Earnings are big, big movers, all right? Last time we had earnings, just to show you, okay, just to show you what earnings can do, was right over here. That was the last time we had an earnings release. Was it? I think so. Yeah, I believe that was, that was the last time we had an earnings release. Okay, and you see, we gapped up big time to new all-time highs and blasted off right there. Okay, same thing that's starting off right here. We gapped down, we called for lower prices. It's gone from 210. Okay, all the way down to 190. All right, $20 move. If you've been trading options like we do at our service, that would have been a very nice profit for you. All right, so that's why you got to pay attention to these videos. So, to kind of summarize my thoughts on Apple, all right, we had an earnings release. All right, earnings are big movers with stocks. We headed lower since then. Okay, now I want to point out that we do have some support right here. Okay, I'm going to draw this level right around here. Okay, anywhere between, I'll just draw this range to right here. So anywhere between about 192 and about 180. Okay, about 190 to 180. Okay, big time support level. Why is it a big time support level? Well, because you have all this sideways trading. All this sideways trading. And again, we're being consistent here because we said that most likely Apple was going to head lower into about 190. We're getting that. Okay, we're getting that. Now, once we're getting here, I want to look for some kind of reversal signal. Okay, I want to look for some kind of reversal signal. I'm not just going to buy the lows here. I'm not just going to catch a falling knife. I need to see some kind of reversal signal. What kind of reversal signal? I want to see some kind of high volume action. Maybe closing over the previous day's high, something like that, where I'm getting, even on a down day, if there's high volume, and then it's followed by a gap up and a close over the next day's high, that would be a decent reversal signal. So anywhere between 192 and 182, approximately, I'm going to be looking for reversal signals. Again, I'm not just going to catch a knife. I do not want to catch a knife, okay? That is definitely not advisable, all right? The market always gives you a chance. Okay, it always gives you a chance to get in or out, all right? It doesn't just V-bottom straight down and head straight up, okay? There's some kind of signal, okay? Because it needs to build up energy and it's going to give you some kind of a signal, tip its hat in the direction that it's going to head. Okay, so the signal to get out was right here. All right, it was right here on that gap down after earnings. Earnings moves stocks. Okay, so you know what I'm thinking about Apple. All right, the next one I want to cover is, let's go with Amazon. Okay, so Amazon right here, I want to point out this day right here was the earnings reaction. Okay, a gap down on earnings. All right, gap down on earnings. All right, that is a bearish behavior of the stock. It doesn't matter what the earnings are. It matters how the market, because your opinion, whether you're an analyst, whether you're the CEO of your own, of the company, it doesn't matter who you are. Okay, the numbers can be interpreted many different ways. Okay, all that matters is how the market reacted. Did it sell off after earnings? In this case, yes. We had a big gap down and we headed lower for the next 3 days. All right, and we were already in a downtrend here on Amazon. Already in a downtrend. Here's a high. Here's a lower high. Here's a lower high. Here's a lower high. Here's a low, a lower low, a lower low right there. Okay? So we are in a downtrend here for Amazon. If you're looking at the last 6 months, or not 6 months, about 3 or 4 months. Okay? Obviously, if you back up the chart and you look, we're in a major uptrend. Okay? I'll just kind of show you right there. Okay, still in a major uptrend right here. Okay, still major uptrend. All right, but in the short term, or not the short term, but the near term, we are in a downtrend. All right, so that is definitely something that you want to be aware of. All right, we're back below the 20-day moving average. Okay, we had this breakout day right here. All right, this day right here, this big green day, closing over the previous 1, 2, 3, 4, 5, 6 days highs. Okay? Big time breakout. And then what happened? Well, we ended up closing below. We headed lower ever since. Okay? You want your breakouts to hold. Okay? With some sideways trading, something like that. You don't want it to break out with this huge bullish candle and then just head lower and close below the previous day's low for the following 3 days. Okay, that's not bullish. All right, that's not bullish. You want breakouts to hold. Period. So that's Amazon. Looking at Google now. Google, where was Google's earnings? Right about here. Okay, you can see this was the earning. We were already in a downtrend. Okay, we were already in a downtrend for the last several months, and then earnings came out right around here. It didn't move much. But it didn't move higher. Okay, it moved lower. It moved lower, not significantly, but it still moved lower. Okay, so earnings are typically catalysts for stocks. Okay, and the last, just to kind of back it up a little bit, Google had their last earnings over here. We gapped up. Okay, made a higher high 2 days after that, and then headed lower ever since. Kind of traded sideways, and then headed lower ever since. Okay? So that was the last earnings reaction. It was a failed breakout. So we had a failed breakout on the last earnings, headed lower. Next earnings, didn't help us out. Okay? You need to have earnings to kind of help be a catalyst for a move higher. So can we get a move higher, with a little technical breakout in the short term, maybe up to, 1140, up to that previous high? Those lows, yeah, sure, maybe. But we're still going to be in a downtrend if that happens. And we're not going to have earnings to drive us higher. In fact, we've had the last 2 earnings, which has driven us lower. And we just had this last earnings come out, so it's not going to be another 3 months until the next earnings release comes out. All right? So that's Google. Here's Netflix. Netflix, all right? We had an earnings release right here. This is a gap down. That was an earnings release, okay? We had our chance to bounce, okay? We didn't head that much lower. Got a nice bounce, traded up here, back above the 50-day moving average, built up plenty of energy right here, and then just broke lower. All right, broke lower. And then the next earnings release came up right here, gap up. Okay, we thought, okay, it's back above the 50-day moving average and the 20-day moving average with a nice gap up. Let's see what it can do. Nope, it failed. Okay, it failed. It headed lower. It didn't just head lower and bounce right around here. You know, it's okay to get a gap up and then some sideways consolidation. That's okay. But not to gap up here and then completely fail and then break these lows. Okay, we broke those lows. So not good action. These are not bullish behaviors. Okay, I'm just showing you what I'm seeing. All right, and this stuff means something. Okay, clearly earnings has an impact on stocks. All right, I'm not looking at the reports. I'm not looking at the numbers. I'm seeing how the stock is reacting to it, because, you know, I could stare at an earnings report all day and I could say, oh, well, it's bullish. It doesn't matter if I think it's bullish. It matters how the market reacts, because that's how we get paid, is by the movement of the stock. Okay, your opinion means nothing. Your opinion means nothing. My opinion means nothing. All right, it matters what the stock does. All right, so that's it for Netflix. Another thing here with Netflix, we had this support right here, big time support, broke that support, tried to peek our head over it right here on this day, and then boom, failed, broke right back under it. Okay, we broke over the 20-day moving average, boom, failed right back under it. Okay, not bullish behavior. You want that little shelf breakout, you want it to hold. You want it to break out, hold, and then head higher. All right, same thing we did over here. You know, we had this little resistance here. It's a very clear level of resistance. All right, you can clearly see it. You know, we knocked into it 10, 12 days right here. It was for about 2 weeks straight we ran into it. We broke over that resistance right here, and then boom, broke under it, and you can see big move lower since then. Okay, lower lows, lower highs, failed breakouts, you know, bearish movement on the stock after earnings. It doesn't get any clearer than that. At least that's the way that I'm seeing it. Okay, so the next thing I want to point out is Facebook. And again, guys, you know, this is from a we can still get, you know, short-term upside moves potentially. And again, I'm definitely willing to change my opinion on this if we see some kind of big evidence. Okay, but from a longer-term perspective, you know, earnings is really going to be the driver here. So earnings here for Facebook. All right, Facebook. Here was the last earning. Well, the last earning report was here. I'll get to that in a second. But prior to that, we had a down earnings right here. Okay, down earnings right here. It had its chance to bounce, failed, traded sideways, and has been in a downtrend ever since. Okay, big, huge move, and it didn't recover. It did not recover. All right, it's been trading. It broke over the 20-day moving average once for a day. Okay, this is a downtrend. It's the same thing when we were over here, and this was an uptrend. Major, major uptrend right there. Okay, major, major uptrend. See how it barely even, you know, went below the 20-day moving average for a day or two, and then it bounced right back up over it. Obviously, earnings, you know, busted that trend right there, but you can see how that kind of shows you what the trend is. So now moving to the nearest earnings release was right here. Okay, we had a gap up right here, and it looked like this could be a potential move higher if we just held, broke out here, and then see the difference between this action and Netflix. Netflix just went straight lower. We gapped up and then just went straight lower. That was a total failed breakout right away. Okay, and Facebook here is pretty much the same. The only difference is it took longer to do it. Okay. But it had the looks that it could have held, because we had this gap up right here and it traded sideways a little bit, looked like it could get a bounce, but then we ended up closing below the lows on this day right here, and as you can see, it moved lower since there. Okay, that was the earnings release. So tell me what right now, unless we just trade sideways here for the next 3 months until the next earnings release, then we can maybe look for a breakout because of earnings. But as it stands right now, you know, we had a bearish reaction to earnings. You know, earnings was going to be the catalyst to potentially move the stock higher, but it didn't happen. Okay, I'm looking at all of these stocks. Okay, is that all that I was going to cover? Yeah, this is FANG. This is FANG. Facebook, Apple, Netflix, Google, Amazon. Okay, these are the movers and shakers. All right, they are in a downtrend here the last 3 months, and they've already had their earnings releases. They've already had their catalysts to drive them as individuals higher, and they've all had bearish behavior. Okay, so really keep that in mind for not only when you're looking at these particular individual stocks, but as the market in general. Okay, this is going to have a big impact on the market. All right. Hopefully you guys enjoyed this video. Not to be doom and gloom. Okay, I don't care which direction the market heads in. Okay, I really don't. I hope that everyone makes money. I really want everyone to make money. But this, the reality is that not everyone's going to make money. Okay, but the cool thing about the market is you can trade in both directions. Okay, you can trade in both directions. Okay, if you're an options trader like I am and like we do within the service, then you can buy puts when the market heads lower. When the market decides to bounce, we can buy calls again. All right. So with that said, I'd like to invite you to join with a free 14-day trial that we have going on right now. It's a special offer. If you've been watching the videos that we do here, you know that we've never offered a free trial before. Well, not in the last year or two, something like that. But we never offer free trials. We're doing it right now. It's a limited time offer. If you've been watching these videos, we know what we're talking about. And the beautiful thing about this free trial is it's a free opportunity to check out the membership and see what it's all about. Okay? See if it's a right fit. We're confident that you will like it and it will be a good fit for you. But if you don't like it, cancel it. Cancel it before, as long as you cancel the membership before that 14 days is up, then you're not going to be charged a penny. Okay? And it's no risk whatsoever to you. And the cool thing is we are 100% transparent with everything. Okay? Once you're a member, you're going to see all of our trades, not only in the trade alerts, but you're going to see all of our positions with the real-time portfolio tracker. We've been doing this since July is when the portfolio tracker came into existence. So we've got all of our positions since July of this year listed on that portfolio tracker. As soon as an alert is closed out, it's entered into that real-time portfolio tracker, and you're going to see it in your members area reflected right there. And you're going to see how we've done since July. And just a little hint, we've done well. The mock portfolio is up $37,000 since July at this point in time. Okay. And we don't win every single trade. Okay, I'm just going to tell you that point blank. Point blank, we don't win every single trade, but over the long run, and you're going to see that in the portfolio tracker, we do quite well for ourselves and for our members, and that's why I want you to sign up for that free 14-day trial, so you can go ahead and take a look at that. So if you've ever bought and sold trades at the wrong time and lost money, and you've lost your confidence and you don't have as much knowledge as you'd like, then you need to join. Okay, you need to join us here. We're the #1 options trading service on the planet. And the cool part is you can join for free for 14 days. And visit us on the homepage, see what we're all about. We're not like other services. Okay, we are a different kind of service, and the main thing is that separates us from other services is we get results through our different approach. So go ahead. I'm not going to read everything here on the homepage. But go ahead and read that, and you're going to see what we're all about and what makes us different. Again, these are easy to follow real-time trade alerts. They're sent via text message. Each trade has a profit target of 100% or greater, and we like to do that under 2 weeks. We find the action. You keep all the profits. Here are a few examples of some recent trades that we've taken in the last several months. And if you were a member during this period of time, you would have gotten in on that action as well. You can check out our testimonials, see what other people are saying about the membership, and again, join here for free for 14 days. And I hope that you make that decision. You can choose either the monthly or the annual or the quarterly. All of them come with a free 14-day trial, so I really, really encourage you to do that. Again, it's a limited time offer. We're not going to be doing this forever, so I hope to see you in there. I hope you make that decision, and I really look forward to helping you grow your account on a consistent basis and helping you become a better trader. I'll see you in there.